Holy smokes everyone, the situation with Evergrande is deteriorating rapidly. Today we just got news there have been more and more protests outside of Evergrande as people are demanding their money back. Not only this, but China's central bank is bracing for a huge run on cash. I'm also going to go over what's happening with China's debt, what's happening to small businesses that has been covered up, and much more. So everyone, we got so much to get into in today's video. Let's not waste any time. Let's get right into it. Okay, everyone, this is now happening. The contagion is starting to spread. Two Chinese developers delay dividend payments amid payment pressure. The company made the excuse that they need to preserve cash to maintain liquidity. This is shocking, everyone. I literally can't keep up with how many developers are going under. Another one bites the dust. And what were they saying in the mainstream media? They were saying, look, Evergrande is just one developer. There's no contagion risk. This isn't going to lead to broader financial risk in China's economy. But literally every day, I'm now finding out that there's another developer going down. And I'll get into in a moment why I think China is already in a 2008-like financial crisis, but we just don't know it yet. Also, we just got this news today. Evergrande unit proposes delaying possible yuan bond repayments. And investors have now had enough. And this is what's going on now, everyone.
Give us our money back. That was the demand from protesters at Evergrande offices in Guangzhou on Tuesday. Investors gathered there amid worries that their returns would be sacrificed to keep the company afloat, though some said they'd been prevented from getting to the office building. The police stopped us, says this woman. The protests were sparked after Evergrande last week dialed back how much it would repay investors in its wealth management products. More than 80,000 people have bought such offerings over the past 5 years. That includes Evergrande employees and owners of its properties. They were lured by the promise of yields approaching 12%.
You know what they say, everyone? If it sounds too good to be true, 12% interest, it probably is. So everyone, are you starting to see the similarities between what's going on with Evergrande and what's going on with China and the Lehman-like crisis that happened in 2008? I'm definitely noticing a lot of similarities here. And there was also some big action today in China's stock market and the Asian markets. So listen to this, everyone. China's tech sell-off deepens as Tencent sale spooks traders. Also, the night before, there was a rise in US 10-year Treasury yields, and this had a big effect on tech stocks, not just in China, but also in the US. The Nasdaq was down nearly 2% at one stage, and it fell down around 1.5%. Because like I've been talking about, high interest rates does affect high growth tech stocks. So the Hang Seng Tech Index fell as much as 4%, the most in September, in a third day of declines. The gauge is set for the lowest close since inception in July 2020. And I bring up a chart here. We can look at the Hang Seng Tech Index and we can see now it has absolutely plummeted. It is now down 50%. And this is the consequences from China's everything crackdown, and they've been cracking down heavily on tech. The Chinese tech giant cut its stake in Singapore Sea Ltd on Tuesday, selling 3 billion of shares, sparking concerns of similar actions at the other firms amid Beijing's regulatory crackdown. China's US-listed tech shares fell overnight amid a broad sell-off in the sector, with traders worried about the rise in treasury yields putting pressure on stocks with extended valuations. And I'm looking at the futures market in the USA, and it's looking like there's going to be continuing selling in the Nasdaq, the tech sectors, because high valuations are only justified when interest rates are at zero, but when interest rates start to go up, these higher valuations are no longer justified. But like I was talking about earlier in the video, there's about to be a big run on cash in China. Look at this, everyone. China's 708 billion race for cash as pressure on the PBOC to ease. The PBOC is a public bank of China, their central bank. A wall of maturing debt and a surge in seasonal demand for cash will test China's financial markets this month, putting pressure on the central bank to ensure sufficient liquidity. A recent reduction in the reserve requirement ratio for banks could provide relief, but some market watchers predict the central bank could ease again to avoid a liquidity crunch. That comes after policymakers indicated a shift from deleveraging the economy to supporting growth. So what we've seen in China since the Evergrande crisis has started, the central bank is starting to panic. They're having to inject billions and billions of dollars into the banking sector every day and have had to loosen the reserve requirements for banks. And like I talked about in my previous video, this is also coming at a time where in January, developers are facing bills of 189 billion that they're going to have to pay for maturing bonds, workers and suppliers, etc. But that's not all, everyone. We have just got some absolutely devastating data to show what is really going on in China's economy and something that they tried to cover up. Look at this, everyone. China's smallest firms are failing at historic pace as 4.37 million close up shop and registrations plummet. An ex-finance minister has said official economic indicators failed to paint the accurate picture of the economy, and publicly available data did not show how many firms vanished. This is what I talk about, everyone. I'm sure the situation is much worse than they're reporting on, and we can't really trust the data, but even the official data is showing they are in the middle of a deep financial crisis. Only 1.3 million new micro and small firms opened in China during the first 11 months of this year. That is compared to what is normally 6 million last year. That is absolutely insane and devastating, everyone. Over 4 million small businesses are gone like that. We're continuing to see the tech sector get absolutely smashed. I think we're going to look back at this time in history and say this truly was China's Lehman moment. And right as all this trouble is happening, this is what's now happening with the debt, everyone. So listen to this. China's foreign debt edges up to 2.7 trillion at the end of September. And I bring up a chart here of the Hong Kong Stock Exchange. We can see it has fallen all the way from 31,000 to 22,900. It is already in a deep market and is down now nearly 30%. So what this means for you and me in simple terms is I just think this is a matter of time before this starts to spill over into other countries. For example, Australia, the US, Canada, where there's a lot of investment from China. Because like the financial crisis in 2008, when Bear Stearns went down, it took us a while for us to see the effects of the financial crisis in other banks. And like I said at the start of the video, it just seems like every day now I'm literally refreshing the news and I'm hearing another developer's going down, another tech giant is going down. They're cracking down on some other industry. They're hoarding huge amounts of food, and I think they're building up to something big. So everyone, we definitely have to watch this space, but don't worry, I'll keep you updated every step of the way. And what are your thoughts on all this, everyone? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.